Hello guys, Steven Dux here. Welcome to this video. So the market is back a little bit, and I have made 100K last Friday, so which is last week. There's several tickers I want to talk about, and I traded two tickers. One I made 10K, one I made about 110K. So overall it's about 120K gain, minus the borrow fee should be around 110. So let's get into the tickers for the review. And before I start this video, make sure to click the like button and subscribe, and let's get into it. So we have three tickers together on Friday. Typically they don't come in as three at the same time. It's been quite a while since we have a couple tickers that's going to 100, some of it around $8 to $10. And let's go over them one by one. So we have HUDI. This will be a potential play into the next week. If you take a look at the overall chart, stock basically went from 20 to 200. So on really low volume. This, for references, you can check out HKD in August, I believe, when the ticker is trading really low volume without any type of consolidations, and it's pretty much all on parabolic. It's very difficult to trade, and it's also very hard to get executed, especially going short or long. So this one has gapped down from 192 to 110, and we'll see how it performs on Monday. It should consolidate at some point. Once it loses its momentum, it should be a relatively great short. Volume is not there, but it needs to trade at least 5 to 10 million volume before it becomes a short. But otherwise, if volume stays this low next week, try not to place a trade, because these type of low volume tickers can run quite a while. Then following we have SMTG. This is a classic gap up short that I haven't seen for a while. Normally in the previous day, when the tickers spikes a little bit and gaps up in the next day, these type of gap up short becomes a little bit more difficult than normal, because whenever you have an after hour spike, these type of levels on consolidations normally becomes a neutralized area. So if it tends to spike in the pre-market, then the lowest of the spike becomes the neutralized area. But if it starts to spike yesterday's afternoon and formed a consolidation, that consolidation is much higher compared to the pre-market initial point where it started to spike. So that's for SMTG. This is a little bit more difficult gap up short than normal, but it had a massive drawdown in pre-market. I don't think it was offering, so it came all the way back, test the pre-market high. I took a several short. One was around 530, one is 570, one is 560. So my average was around 550, 560-ish. And they pretty much consolidated all day and cracked in the afternoon. This one only fitted about 50%. As I said, that if the ticker tends to spike in the afternoon and that consolidation area becomes neutralized area, then the drawdown percentages only will be 50%. Typically, if it starts to spike in the pre-market, it's around 75%. So that's for SMTG. Then we have PKBO. This is first green day, and pretty much no history at all. Then we had a weird pre-market spike, lost all of its momentum after market open, came all the way back and didn't really crack in the afternoon. So this is also a classic first green day. Typically these type of plays are not shortable. First of all is when the volume is building from the bottom, which is the stock start to spike from the yesterday's neutralized area. That means the volume is start to increase at the bottom of this ticker. So when the volume start to build at the very lowest price of the neutralized area, typically these type of spiking ticker are very difficult to short. As you can see, how the chart really performed. Consolidated all day, cracked it in the afternoon, came all the way back. So this will probably continue on Monday, likely to push over 1010. Then it should be a short either on Tuesday or Wednesday. So those are the three tickers I want to go over at, and the SMTG is actually the first gap up short I've seen for a while. but it was a micro flow, so I didn't get to sizing as big as I wanted to. Volume is definitely dropping. Typically on a 1 million flow on a $5 ticker, it trades anywhere between 50 million volume to 70 million volume. But on Friday only traded about 35 million volume in total. So definitely the liquidity is dropping, so make sure be very careful with your size, and also pay a good attention to the 2-minute candlesticks, because the volume will tell you how much you can size in, how much you cannot. Typically you don't want to exceed over than 1% of the volume. So that'll be all of the recap for all those tickers. By the way, we have a new course that's going to come out on February, and the pre-sale is going to end within, I think, 2 weeks. So make sure to grab your chance to get the discount. So thank you very much for watching. I will see you guys in the next video.